Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 20th of September. Starting off with the FTSE 100, which has delivered a bounce above the rising 200-day moving average. That's as strong a signal, or maybe even stronger than the one we had earlier in the month with the consolidation and bull flag breakout above the 50-day line. So we're looking for that late May resistance line. Projection now up to 77.90 is an initial target, hopefully by the end of the month or even sooner, especially if the Bank of England doesn't raise rates tomorrow. Above 77.90, looking for 8,000 maybe by the end of next month, and that would obviously be rather strange to have a rally over September or October, which are not normally the best months for the stock market. Below 76.30, if that happens, then it would be down to the 50-day line, 75.10, but we're not expecting that at the moment. Moving on to the DAX, which in a way actually has been less sprightly than the FTSE in the recent past. Here you can see the same battle with the floor of that rising trend channel from December. That's 15,600. Got the 50-day line, which has been resistance basically since the beginning of last month. We need to clear 16,000 on an end-of-day close basis to give us a chance of retesting the year's best levels, 16,500 plus. On the downside, not really expecting anything lower than the 200-day line there at 15,500, but if the nightmare scenario evolves, then it would be down to a late May support line projection at 15,100. But the RSI in the neutral area, not really expecting too much movement either way for a while. The Dow also had a weaker day yesterday and testing that line from October, which is around 34,300. Below that, we're looking for a retest of last month's support, just below 34,000. Probably the worst at the moment would be the 200-day line, 33,800. Still waiting for that elusive end-of-day close or weekly close above the 35,000 level, which is basically 1 month resistance. The plus point at the moment is the way that the 50-day line is still rising quite sharply, so that should hopefully drag this market higher, or at least prevent too many losses. Bitcoin is next, and that's been looking encouraging over the last week or so. It's now toying with the 50-day line. It seems to be all the markets are toying with the 50-day line at the moment. We've got a line of resistance there from back in July, and the 200-day moving average, basically 27,900. That's the level to break to then give us a chance of hitting up to 30,000 plus, possibly for October. RSI configuration is encouraging in the sense that we've had bullish divergence with a lower low for September, but higher RSI trace, so that should hopefully drag this market up over the near term. Below 26,000, and that January support line then risks a retest of the 25,000 area, which is post-June support for this market. Moving along to the stocks, and not too many new ones today, but we're looking at some of the old ones. Corcel, here we had a gap higher to start the week, but consolidation really in the mid-40s. Like to see this market above 0.47, which was an old target that we had for the stocks in November, resistance line projection of 0.47. Above that, looking for 0.57 at that October resistance line projection over the near term, maybe over the next week or two. The 200-day moving average and the 50-day moving average is both rising at the moment, so probably a day or two away from a golden cross, and hopefully that will provide fresh impetus to the shares. The whole rally here started with bullish divergence in the RSI window, so let's see if we can get a bit more. Looks like a mid-move consolidation ahead of a new leg to the upside. The initial rally here was basically from around 0.23 to 0.55, so that is around 0.3 pence, and then we would be looking for 0.4 to 0.7 as the next leg on a measured move basis. So all to play for at Corcel. On to capital metals, which has not been quite as bullish as this market. But here we've got the first signs of a turnaround. We've got bullish divergence there from a July line there, so lower lows for August, September, but higher RSI trace. Just puncturing the 50-day moving average at the moment at 1.1 pence. And we haven't been above that 50-day line since way back in May. So looking for a target here up towards a June resistance line projection at 1.6 pence, hopefully by the end of next month, while we hold above the 1 pence area. So hopefully the shares can do that. But it just looks as though there are some people accumulating the stock near the lows. On to a favorite of mine, which is Great Southern Copper. And let's see if I can type in the right code here. But we've got the shares gapping up to start the week, and following on that gap, so breaking the gap up day around 3.3 pence. The target here up to as high as 5 pence by the end of next month, while we hold above the 50-day line around 2.5. But ideally we stay on the right side of 3 pence, as we had a gap higher through that level back at the end of last month. So above 3, looking for 5 basically for Great Southern Copper. Onto a stock which I know people are willing higher, Greatland Gold, and it's interesting to see after the big up day that we had earlier in the week, on the 15th, it was last week in fact, on Friday, we got into a potential bull flag here, consolidation above a rising 50-day line, so that is encouraging, suggests that we're in a mid-move consolidation, and the next move could be through the 8 pence level up to as high as the top of that broadening triangle from November at 9 3/4, hopefully by the end of next month. But the key here is holding above that 50-day line around 6.9 pence and ideally finding support above it, which so far we have done. Onto a stock which I was forensically looking at earlier in the week, MobilityOne. Here the theory was that we were in a sideways shuffle above a rising 50-day moving average and we'd have a breakout, and we've got that breakout, which is great, up 20% today. Now looking for as high as 9 pence, which is what we were looking for before, while we remain above the recent flag floor at 5.5 pence, above 5.5, looking for 9. Hopefully by the end of next month, and the way things are going, we might even get it by the end of this month. Another maybe esoteric choice here is MC Mining. Here the first signs that the shares are turning around after they had that basically extended bear run. Here we were puncturing the 50-day line again. That's starting to rise already, which is great. We've had a triple bottom there around the 7.2 pence level, and the view is that we can get a decent end-of-day close above the 8.5 pence level and that resistance line break from earlier in the year. Then we could head up to 11.5 pence by the end of next month. So looking encouraging there. And for Pharma, has not been here for a long time, and you can see from the chart probably why it hasn't been here for a long time. We've been going down for a year, but just the first signs here with that potential exhaustion gap down that we had earlier in the month. Also lower lows for the latter part of September, but the RSI no lower, so that's bullish divergence. Want to see a proper end of day close above 1.4, maybe 1.5 mid close, and then that could take us up to the 1.8 or 1.9 pence level by the end of next month. One of the diamond hands trades of the recent past has been Orcadian. It looked like the shares were down and out, and we even had a false dawn there at the beginning of last month, but it looks like we've had a proper dawn this month, and with the rising 50-day line, a break of the 200-day moving average, we've hit our first target there around 10 pence, above 10 pence, looking for a best case scenario target as high as 14 pence, although obviously some people might think that the shares have gone a long way in a very short time, but up from 2p to 10 or 11p is obviously no mean feat in current market conditions, but just waiting to see whether we can break that high of August, 11.5 pence on an end of day close basis. That could give us the move to 14 pence while we remain above the, I suppose at the lowest really, 8 pence at the lowest on that, given that that was resistance on the way up. On to Seed, which has delivered for both, I think, fundamental traders and technical traders. We had an initial target here around 3.1 pence. We had a second target there around 3.7 or 3.8 pence. We've taken that out as well. Above 3.8 on an end-of-day close basis. Now looking for 5 pence, which is the main resistance on the way down from last year. So we had a double top there, June, July. So 5 pence, ideally by the end of next month, while we remain above the 3.5 pence level. Let's see if we can do that over the near term. On to Scancell, where people were guessing that there was going to be good news, and there was. We had an Unfill gap to the upside yesterday. We want to break the high of yesterday at 16 3/4. We can do that on an end of day close basis. It could be up to 24 pence by the end of next month. A great recovery there, and the trigger there, the bear trap at the beginning of the month below 8 pence, and the bullish divergence that accompanied it. So looking good still on Scancell. If you're looking for a stop loss, probably the bottom of the gap at 14 pence would be the place to consider. On to a stock which has got a cool name and has also had a cool bit of price action over the course of September. We had our classic Unfill gap to the upside, sideways shuffle above a rising 50-day moving average, and that gave us the powerful move higher that we've had. Unfill gap to the upside last week as well. The view now is at above 85 pence. We're going to have a new leg to the upside, so the best case scenario target here is high as £1.40 by the end of next month, if we can get as much price action above 85 pence, our old target, as possible. On to the last two. First one is a company which I don't think I've looked at before at all, and that's 10 Lifestyle Group. Unfill gaps to the upside, 2 in a week, which is pretty impressive. One was above the 50-day moving average, and then we've had another one above the rising 50-day line. View now is at above 101, which was the old June peak. We're looking for further progress within a rising trend channel from January up to £1.21 as soon as the end of next month, or even sooner. But great progression here. Unfill gaps to the upside, sideways consolidation, and then another move to the upside. So looking pretty good there for that stock. On to Wishbone, which looks like it's finally managed to escape the evil clutches of the bears. Here we've got a W-shaped reversal, breaking that neckline there and gapping up today, which is what we like, a gap higher. In fact, we've had 2 gaps higher in the last week, so that's pretty impressive. That suggests that above 2.4 pence, we should head up to 4 pence relatively quickly. And that double gap higher is something that you don't see very often, especially near the lows. And looking for 4 pence by the end of next month while we're above 2.4. That's it from me today. More updates tomorrow.